Is gold about to melt, or is this just a trap for sellers? Here is the institutional breakdown. Please watch the full video. Looking at the 1-hour chart, XAUUSD has undergone a significant structural shift. After a massive bullish expansion that topped out in the major supply zone around 4,880, the market delivered a clear bearish break of structure. We are now officially tracking a series of lower highs and lower lows, confirming a dominant red bearish trend. Currently, price is consolidating inside a demand zone after a sharp drop, but do not let this range fool you. The overall market structure still heavily favors a continuation to the downside once this pullback is complete. We have three critical areas where the smart money is likely to reload sell orders. First, 4750 to 4765, which is our nearest supply. It is an immediate intraday sell opportunity. Second, 4820 to 4840, a high probability reaction zone featuring strong imbalance and historical structure. Finally, 4860 to 4880, the origin of the entire sell-off. This is the ultimate institutional level where a massive rejection is expected. On the lower side, we see demand between 4675 and 4690. However, this zone is looking weak as it has already been tapped multiple times. The high probability buyer interest actually lies deeper, between 4620 and 4650. Our primary bias remains bearish. The plan is to sell the rally. We are waiting for a retracement into the 4740 to 4765 supply zone. Once we see a rejection, our targets are set at 4700, 4680, and finally 4640. Place your stop loss above 4785 for protection. Avoid trading inside this current range. Wait for the supply tab. Only a strong break above 4765 will flip our bias to bullish. Trade smart, stay disciplined, and always manage